Going live in 15 minutes. Good morning, everybody. It is 9 a.m. Monday, January 16th, Martin Luther King Jr. Day here in the U.S., so we do not have the stock market open, so all the OTC versions of these stocks are not going to be trading, which is certainly noteworthy, but we have the Canadian sector to be watching. We've got news on CGC expanding their capabilities of production sorry about that. With their expansion. So seeing a higher bid and ask pre-market there, we're looking like we're going to battle $10 psychological resistance, and the gap would fill if we drop down to $9.79. So we'll see if we get a gap up and a sell the gap up pattern, as we have seen time and time again in the past month in the sector. Seems almost like clockwork at this point. I personally still have a position in ACB, and I'm scouting out a position in either APH or EMC. More likely APH than EMC at this point, but that remains to be determined. So over the weekend, there's been some action here in the U.S. sector. I'm going to share a news article here. Find it. There was a hack. There's a company, MJ Freeway, in the U.S., which is one of the leaders in terms of having a system that pretty much tracks everything from seed to sales. And it was hacked maliciously and has been going through all kinds of PR disaster with everybody unable to access their accounts and all that. So I've just been watching on the Facebook aspect of things with them trying to deal with their customers, and there's a lot of anger, and it's definitely been a whole debacle and pretty much a disaster for this company. But very interesting that the hackers, they didn't ask for any ransom or anything. It seems like it was just a personal attack or malicious intent, but very interesting to keep an eye on what's going on around the world in the sector. And this was the big news over the weekend in the US. So if you look up MJ Freeway, you'll find articles about the hackers going after their system, and it's been one big mess over there. So we got the open here in a half an hour. Happy to look over any daily charts while we wait. Probably started a little bit too early here, but that's all right. So I'm still liking how the daily charts are holding up in terms of maintaining higher lows. We had our lows back at the end of December, and it's been higher lows since then. It's been very weak and very contained, but it's certainly slow and steady, higher lows, higher highs, and the bulls can't complain over that. And we've got CGC and MT are lagging behind a little bit, and I do believe that that is due to the pending deal. We had APH and ACB and some of the other names make clear breaks for the bulls, where CGC has been lagging behind. So APH broke resistance of December 14th, which would be equivalent to CGC being up at 11.17, and we're still over 12% below that level. So some clear discrepancies occurring between the normal sector leader that we're used to here and now some other names taking the lead. Also watching MJN very closely. And I posted that list to start the new year with top watch for the sector, and MJN was on there because of the daily pattern that we were seeing. So here's MJN, and the pattern I liked was this 133 support, 135. So we had a clear base of support and lower highs tightening range, and the bulls made a break, and they broke out in a strong way. This is one of the strongest names in the Canadian sector when you look back at how close we are to the price, the high that we hit back at the end of November. No other real name is really that close to that level. So definitely worth keeping an eye on MJN, and it's had nice, healthy consolidation. Look at the bear volume on consolidation. It's decreasing. We see a lower wick with the bulls buying the dip on Thursday. Very tight range on Friday. This is a bull flag pattern, and a bull flag indicates continuation is more likely than not. So definitely worth keeping an eye on a buying opportunity for MJN. We've got resistance at $192 and $2. Current support is $175 and then down to $168. If I were making a bullish entry today on MJN, I would put my stop loss just below $175. Keep that risk really small and be able to exit and reassess the situation if $175 support were to break. I can look at SPRWF, but it's not trading today. It's a U.S. ticker, and the U.S. market is closed. So I can look at the daily chart and get information there, but not going to have live information on the trading occurring. So it was a very clear, strong close, high volume, close at the high of the day. And even you could just see the psychology of what's going on here in our chat room because we had a spike in volume. People could see that we were seeing a little end of the day run, and everybody started to assume that we were going to get news over the weekend, and we didn't. So very curious to see if we get a sell-off reaction first thing just because we didn't get that news and everybody was anticipating it. And just seeing in the chat room, people were talking about, oh, this might be licensing news over the weekend, and people did buy positions based on that. So the momentum was certainly heading towards the upside. And the resistance on SPRWF is 144. There's a little double top at 144. So that would be a very key resistance to turn into support. Then we'd be looking up at 150 and 154. So a clear breakout on SPRWF and SL. And we'll see if that leads to any kind of news. But at this point, it does not look to be news related. Also watching EMC really closely. Anytime you have a stock that is on the brink of blue sky breakout, it is absolutely worth watching. And key support is down around $4. We bounced off of 405, and you can see that everybody's buying the dip here. All these lower wicks on these candlesticks show bulls buying the dip. There was definitely profit taking on that new blue sky breakout, and the range is getting very tight. And in the next week or so, we're going to see either a move up to 460 or move back to 405. Personally, I'd love to see a move back to the low $4 range and ideally a bounce off this middle Bollinger Band support, which is currently at 368. That would make me more comfortable with an entry. If I were making bullish entries up where we are currently standing, I would have a much shorter time frame and I would lock in those gains quickly, which would have worked well on Wednesday when we did get that new all-time high. So just because we are in a very bullish run over the past month, I would be quicker to lock in those gains if I were shorter term trading. Otherwise, I'd be looking for a more longer term swing entry down closer to $4 or even below $4. I would be looking at 350s as the next support. And 350 stands out because the first day of trading on IPO day, 350 was a double top. The bulls, well, not a top. The top was 398, but it was a double level of resistance. We hit 350, we pulled back, we hit 350 again, and then we pulled back, and the bears took over for a week. So 350 resistance and 350 now at support. That is an important psychological level going forward, and certainly a level to keep on watch. Sand is a new ticker to me, and it looks like it's gold. We're going to stick to MJ this morning. But gold is still bullish because gold is trading right now. Gold has resistance up at 1206. It's a little bit of a double top on the hourly. Bulls need to turn 1206 into support and see continuation on this bounce play out. Everything right now is consolidating on gold while we are at this resistance. And the range is tightening within the next 24 hours or so. We're either going to see a clear break over 1206 or we're going to head back down into the lower 1190s. But gold bulls holding up really well to the end of last week. We watched the miners here in the U.S. Remind me that ticker of International Cannabis Corp again, ICC. That might be it. There we go. So trying to hold the middle Bollinger Band here, 91 cents. We've held it the past few days. And looking like 89 cents is the lowest price we've hit in the past few weeks. And clear resistance is at 99 and then up to 102. The $1 psychological level, you'll see this very often on stocks that are at their $1 level. It's very strong resistance and very strong support because of how clear a psychological level that is. You'll see traders looking to take profit at $1 or looking to buy on $1 if the price is consolidating to that level. So 99 cents and 102 are clear resistances. As you can see, it's very tight and that volume is very low. So keep an eye out for a volume spike to indicate this tight range is breaking. But the range right now is 89 cents to 99 cents over the past 4 days. And the bulls need to form a convincing higher low. We have our low on the pullback since we began trading at 69 cents. Now the bulls are trying to make 90 cents, that higher low, and we would have to head back up over $1 for the bulls to be confident that that level we're going to hold, and we are going to resume heading back to previous resistance levels. We topped out at 176, so we're still a long way away from where we were back on the third day of trading. CMM.V, nice bullish way to end the week. You can see, again, we had a bull breakout on Tuesday with high volume, and then we consolidated on very low bear volume. That's exactly what the bulls want to see. And then another bull move on Friday with higher bull volume. So we closed at the high of the day, 91 cents, looking at 93 cents, the high of that break attempt. And we have a very clear higher low pattern, 75 cents, higher low at 82 cents, and then up again to 84, but clear lower highs as well. It's getting very tight. We're going to see a clear break this week. The range right now is 93 cents and 87 cents. The bulls have the momentum. The upper Bollinger Band is going to be there. They're getting very tight. But after 93 cents, we're looking up at 99 cents. And then again, that dollar level, it's going to be a very tough psychological level. But right now, the bulls have the upper hand due to that momentum on Friday heading into the weekend. We're on the verge of a bullish MACD cross. But this is definitely a good chart to be watching because how clear the break is going to occur very shortly. You guys can put the Canadian, hard for me to keep track of what's THC. Don't believe it's .V. We got the open in 20 minutes, and with the bid and the ask pre-market, we certainly see it shift around a lot. And I would start paying attention to the bid and the ask 10 minutes before the open. If you're watching level 2, and if you're trading, level 2 is absolutely a must, in my opinion, for low cap stocks. Especially if you're day trading. If you're not day trading, it's less important. But if you are day trading and short-term trading, level 2 is extremely important. And again, the bid and the ask are going to do a lot of shifting around pre-market, and really none of that information matters until we get really close to the open. And otherwise, it's just positioning that will have no bearing on the day. So once we get about 10 minutes into the open, that's when I'll start looking, or 10 minutes before the open, I'll start looking to see where the bid and the asks are. And it's very interesting because the Canadian sector here doesn't have pre-market trading. So in the US sector, it's less common in the USMJ sector than it is obviously with the big name stocks that trade pre-market, like Apple and Facebook and all those names. But you'd get some gauge of volume pre-market to let you know. And again, volume's such an important indicator. It's almost like a truth gauge, or it shows you whether or not the move has a believable move and volume behind it. So to have no volume pre-market, it's kind of just the market makers taking the bids and the asks and positioning things. And really you get no information from those market makers about anything other than what they're showing you. And that's why, in my opinion, we're seeing so many common gap and trap patterns, because the market makers just open it higher. And in my opinion, the market makers are making nice money on those gap ups every time, just selling right into them. Because really, we're not getting any information about why they're opening something at a certain price. And with U.S. stocks, you can see pre-market, okay, there's nice solid bull buying volume compared to, the previous week of pre-market volume. We have all kind of metrics we can compare to. And we don't have that in the Canadian sector with no volume pre-market. MGW. This is another one we can be looking for a bullish entry, and I always love when there's a nice clear support level to be watching so we know when to exit. So you can see a bull breakout. We've consolidated. There's no red flags on this consolidation. The volume is small. It's decreasing. The bulls are buying off the 50-day moving average support. So 65 cents was a double low. It's actually a triple low the past 3 days. So you cannot get more clear than that. If you're making a short-term bullish entry on MGW, you want to exit if 65 cents breaks. Put your stop loss at 64 cents. Very little risk if you were to get stopped out. And the reward would be the bullish continuation on this turnaround of this trend. Very clear higher lows and higher highs since mid-December. So a close at the high of the day on Friday, resistance is 68 cents, and then up to 70 psychological. Nice increase, a little uptick in bull volume. So looking for the bulls to show back up again. We need to break this lower high pattern. We've seen a lower high every day since we began consolidating. That's 5 days in a row now of lower highs. So it's likely that the bulls will break 67 cents just because that's where we closed on Friday. And we're looking for continuation back up into the 70-cent range. So definitely keeping an eye on MGW. And I actually want to check out the weekly time frame here. For the weekly, it's all about this middle Bollinger Band. Bullish reversal hammer, holding that level, confirmed the next week, still holding that level. Last week, the low of the week bounced off that weekly middle Bollinger Band, and it's going to be in the low 60-cent range. But this is a good-looking weekly chart. And the bulls certainly have control over the past month on the daily. HLTH also has been in a little uptrend since the end of December, trying to reverse this trend. A clear resistance level to break the lower high pattern longer term would be 305 resistance, and we got up to 280. So still work to do, but we do have a nice little higher low and higher high pattern. Little bit of a red flag, the increase in bear volume from Thursday to Friday, and the higher low established on the last consolidation was 235, and then we hit 235 again. So that's a clear little double low of consolidation. If we break 235, we're looking down at the middle Bollinger Band and the next support down at 210. So 235 would be a must hold for the short-term bulls. In the weekly time frame, you can see the rejection from the 200 week last week, and then a big upper wick, lots of profit taking. Or that was actually 2 weeks ago we rejected, and then last week we rejected again. That level is 252, and very clearly we are in a lower high, longer term downtrend, but we have a base of support, a little bit of a double bottom between 182 and 180. So we know that's a must hold level on this longer term trend, but we also know the bulls have work to do to try and change this consolidation that we've been seeing. We need to see a break of the lower high pattern, and we need to see that 200-week moving average become support. So from a longer-term outlook, the bulls still have a ton of work to do, and 180 is a must-hold level. SYMC full breakout. Really strong here, increasing bull volume the past 3 days. And as long as we continue to close above the upper Bollinger Band, we are in breakout mode. Once we got over 25.39, that was a very key resistance level. And we are seeing a lot of strength here. Need to look at the weekly for the next resistance. And it's always a good sign when you need to zoom out to a longer term time frame to find resistance. So look at the breakout. This is a very nice pattern for the bulls. Big time breakout. We consolidated for a few months, and now we're ready for another leg to the upside. So very strong break for the bulls, and we could draw a downtrend resistance line. Hitting those lower highs, you can see the breakout occurred 2 weeks ago, and then last week was a big time follow through. So certainly a bullish chart, and looks like we might be at all-time highs. Obviously, all-time highs are always best case scenario for the bulls due to the lack of previous price resistance. So we're looking at psychological levels. 27 psychological would be a next resistance to watch, but the bulls have full control in the short term. If we lose the upper Bollinger Band daily support and close below it, that tells us that short-term consolidation is going to be coming. And if I were not already in this trade, I would wait for that consolidation. I don't like buying this late into a move this far above the upper Bollinger Band. I like to buy on consolidation if I've missed a move this big. So there are plenty of times where I will pass up a breakout and miss a little bit of gains to the upside. But in terms of doing this in the long run for a long period of time, if you take the odds of risk to reward long term, the amount of times if you were to buy on this breakout, you would lose more than you win just because you're very late on this move, and we've already seen a 10% move in the past 2 weeks. So personally, if I were not already in this play, I would wait for a close below the upper Bollinger Band, and I would wait for some consolidation to make an entry. And that's the same thing with what we're seeing with MJN, where we had that breakout, and now we got that consolidation. So I would much rather buy after, you can see we were above the upper Bollinger Band, we lost it, and now we're consolidating in a healthy bullish manner, looking like that bull flag pattern. And I would much rather buy on this consolidation than I would in the middle of a breakout. SL, if we do see that lower open on the bid and ask, that just means that people are a little bit scared that we didn't get any news. They were anticipating news over the weekend. They figure, oh, everybody's buying, volume's coming in. You can see the psychological effect there where you've got, it could have taken one person. I don't know what the volume was there at the end of the day, but if one person with $100,000, started buying up the ask, it's a trigger effect. Everybody sees the volume coming in and the price action going up, and then they all jump in because they think something's in the works in terms of news or licensing and all that, and then nothing happens. So now we're seeing people wanting to get out because, oh, we didn't get any news over the weekend. So it's going to be very interesting to see how SL trades here with regard to that. But it was a bit of a herd mentality at the end of Friday with everybody jumping on board, assuming that we were going to see some news over the action. And SL, I can't get SL on pretty much any American software. And I have tried time and time again on stock charts, on TradingView, on Fidelity. It just is not charting friendly for the US. The THCBF, that's the OTC version. It's not going to be trading today, but very clearly struggling. Look at all these resistances at 75 cents. So once I see this many rejections from the same level, that is the level that must break for me to be interested. So let's look from December 22nd. Look at these highs. 747, 75, 75, 749, 7455, 747, 75, 753, 749. You get the idea. Very clearly, 75 cents needs to become support. I wouldn't touch this play bullish until that occurs because I have seen rejection after rejection for 3 weeks from that level, and I know that the bulls are not in control until they can break that resistance. So personally, that's what I would be waiting for if I were looking for a bullish entry in THCBF, and that is what initiated my bullish entry in ACB. A much less clear resistance, but it was 230. We had a high of 230, 230, 229. And that was back at the end of December. So I made a bullish entry and then 230 again. So 4 days in a row, rejecting from 229 to 230. I made my bullish entry on the next day when that level broke on the increase in bull volume. We had almost 100% increase in bull volume and a clear break of that resistance. So as soon as the price hit 231, I jumped on over to ACBFF and I bought in because we had broken that resistance, and that showed me that the bulls had momentum. So it would be that same scenario on THCBF with 175, or actually just 75 cents becoming support and breaking as resistance. FNREF. Not sure if there's Canadian involvement, or I should say MJ involvement there. I certainly know mining companies need to be careful of this. If this is the case, if Finor is expanding into marijuana, because the U.S., this exact same thing happened. We had mining and oil, small cap companies, penny stocks that were pretty much dead in the water, not doing anything. And then they said, okay, there's a big rush going on here. Let's change our name. Let's change our business plan. And that's about it. That's all they did. And they saw a big spike because of it. Everybody says, oh, man, we're looking at, the next company that's going to expand into marijuana. And really all they were doing was trying to catch on to the hype train. And these companies did nothing, and they have absolutely nothing to do with marijuana, except they changed their names and they changed their business plan, and they wrote a few paragraphs about marijuana and what they plan to do, but they don't do any of it. So I'm not sure what the regulatory agencies are like in Canada. I assume they're going to be overwhelmed in the next couple of years with the companies that do this, because the U.S., like I said, when I was starting to trade them, there were 6 to 8 companies, and now there's over 300. And I remember that boom happening, and there were dozens and dozens of dead penny stock companies trying to jump on board this train and just being scam artists. There's no other way to word it. They were absolutely preying on unsuspecting investors and traders and lying about what they were planning to do with their company. So clear resistance here, 34 cents, 34.5. The upper Bollinger Band rejecting the price on Friday. And support, the bulls really need to hold 28 cents, or we will be looking down in the low 20s, 2.3. And you can see how tight this has been. And we did get a bull break 2 weeks ago. That is a good sign. But there's not a ton of trading history, and it's a pretty tight range. Always want to compare dollar volume. So I can see here that the highest volume day we've seen in the past 6 weeks has been under $60,000 traded. So you look at companies that are trading millions of dollars, and you look at something trading 60,000. I see some days here we have less than $2,000 traded. I would avoid this name for that reason alone. Illiquidity. If you don't have liquidity, you don't have trading opportunity. Here's another day with less than $1,000 traded. So big red flag, lack of liquidity. Absolutely suggest using level 2 quotes. It's a lot less important if you're swing trading or investing. If you are short-term trading, level 2 is very helpful. I used it all the time when I was trading penny stocks in the US, and you can definitely see supports and resistances, and you can see games being played on level 2. Someone will throw up a big bid, or I should say a big ask of resistance, and then people will see that ask and start selling, and then that same person could be buying in, and then that ask suddenly disappears without anybody touching it. So you definitely can see what's going on level 2 a bit more clearly, and it just does show a little bit of games more clearly as well that you wouldn't normally see by just looking at the topmost bid and ask like you see on these quotes. So ACB is still looking good. A lot of the bulls bought the dip in the Canadian sector Thursday, and we wanted to see some nice follow through on Friday. We got a tiny bit of follow through. A lot of names broke their high of Thursday by 1 penny. Not very convincing, but can't complain. Bulls bought that dip. The low of Thursday on a lot of names is now important. If we break that low, it's certainly a red flag. I would exit my ACB FSFF position personally if we break the low of Thursday for ACB, which is 237. That would be my exit target now that the bulls have bought that dip. And if we fall back and cannot progress from that move and we break 237 support, that's an exit signal for me, and I would get out with a small amount of profit. I've already locked in half of my position to be safe because we couldn't get over 264 resistance on ACB, but I am still liking the way the daily chart is looking. And the bulls want to see a break of 252, and the next resistance would be up at 256. So we got the open here in just a couple minutes. I'll be watching CGC to start just because we have this higher open. So you can see the closer we get to the open, the less and less of a gap up we have as the bid and ask drop down. And again, the gap will fill at 979. That was the high of the day on Friday. And we're watching the high of Friday on all these stocks as resistance. And obviously the bulls want to see a break of that level to progress with higher highs. EAT is another one that I can't really get charts on. See if TradingView has it. One moment, checking for nutritional. So yeah, I can only get the US version, Spliff. But the daily chart for Spliff, do this real quick because we got the open coming. 18, 18.4 resistances, and we have a very, very tight range. You can see the volume completely dropping off. And there's another red flag, the lack of volume. Although this is the OTC version, so I take that back. Obviously, the Canadian version has more dollar volume. So 18.4 is a little double top, and then we're looking up at 19.9. Might as well call it 20 cents psychological. The Bollinger Bands are getting very tight as we trade sideways on low volume, and a must-hold support ideally would be 16.9, a double bottom the last 2 days. But if we hold 16.5, we do continue with this higher low pattern. So you can see very clearly lower highs and higher lows, and now we're trading straight across. A break is imminent in the next week or so, and it will be accompanied with a volume spike. And there goes CGC's open. So all that pre-market action means absolutely nothing. That's why I don't pay much attention to it until the open. It was showing us 20 minutes ago we were going to see an open 15 cents higher. And obviously we did not get that. So there is no gap up on CGC. Looking like my data instantly froze here. Fidelity should be giving me live streaming data. It's coming in slowly. Might be lagging behind a bit with the US market close. Maybe they aren't on their game. But either way, we see ACB has a little double top with the high of Friday. 252 resistance needs to break. For CGC, it's 979 resistance that needs to break. And OGI is just one bear. All that bearish news certainly taking its toll. And I personally wouldn't be anywhere near OGI. There are so many other names you can look at that are more bullish. I would want nothing to do with OGI personally. You can see the ask is growing on ACB a bit. Checking in on EMC, it's certainly been one of the more significant movers in terms of daily range. 445 was the high of Friday. That's the level the bulls want to break. And looking like MJN is continuing to consolidate a little bit. That low of consolidation so far on MJN is 175. Key support level at 175. If we break it, we're looking down at 168. If the bulls hold 175, that's going to establish itself as a base of support going forward. ECB trying to break the high of Friday. So right, I wouldn't touch OGI because the daily chart is very clearly the lead bear. It's much more so bearish than everybody else, and of course that correlates with the bearish news and the recall. It's just a whole mess, and why be in that stock when you can be in stocks that are much more bullish and don't have to deal with all that? So EMH, checking the daily chart to get caught up with what we've got going on in EMH. Not a lot of volume so far. The high of Friday was 157, so bulls want to break that level of resistance. But EMH is looking good on the daily chart as well. It had a bullish break. Right now, the stocks are separated between names that have broken their high of December 14th and names that have not. MJN and EMH are two names that have, and a lot of the big names have not. APH is the only big name that has broken the high of December 14th. So that's a clear distinguishing point for me because it was a break of the lower high pattern on the daily, and the bulls are in control over the past month on EMH. So support, looking down at the low of Friday, 149. Bulls want to hold that level ideally. Resistance is up at 163, the high we've seen on this move. And again, these names, EMH and MJN, are much closer to their highs at the end of November than a lot of these big names are. So it's almost like a laggard situation. We're getting into these names that didn't run as significantly as all of these bigger names. And they're certainly looking the best on the daily chart EMH and MJN are over the past 2 weeks. So MJN is still consolidating. 175 is a key support. If we see that level hold, we know that is a strong level going forward. For CMED, if you're following CMED, the key level to be watching is $1 or $11 psychological. Close below $11, we're going to see another leg to the downside. We've seen that support defended time and time again. I'm going to restart Fidelity here real quick. It's certainly acting slow, and I want to see if I can fix that. You ever go to Colorado, Ice Lake Basin, worth the visit. So I personally wouldn't be looking for an entry in MJN until I were more confident that 175 were to hold. So I would want to see another test. Today would be that test. And so far it is holding, but again, not convincingly. So that would be a potential bottom fishing play where if you were to make an entry in the low 175s, just that from a day trader perspective, let's say I entered at 177 and I would exit at 174 if that level were to break, just to try and get a potential bounce off of that 175 support. And I would be risking $30 on every 1,000 shares I had on MJN. So it's a very low risk. Possibility of getting stopped out would be pretty high because that support is not strongly established at this point. But again, it's such low risk that anytime I can make an entry right near a key support and have a very clear exit level, I certainly prefer that kind of entry rather than chasing something on the way up. So CGC has been unable to break the high of Friday, even with that news. Currently a little double bottom at the low of the day, 965, not done testing that level. ACB bulls are struggling at the high of Friday of 252. And I always compare volume to the previous day. And it's a little too early to do so yet, just 6 minutes into the day. But what I'll do is I'll look at the hourly chart and I'll look at the past 5 days of action. And I can say, okay, ACB, first hour, 1.5 million shares traded. Then we had 750, 700, 480. So I can see the morning volume in the first hour has been dropping off. That's a very clear pattern. And if we were to see more than 479,000 shares traded in the first hour today, I could anticipate that we are more likely than not to see more volume than Friday total if we start the day seeing more volume in the first hour. I'm always looking back and comparing, and I'll compare percentages. So like say at 9 or 10 o'clock a.m., we're 50% through the first hour of trading. And if we already have 70% of the first hour trading of Friday's volume, I can then make the assumption that we will likely see a little uptick in volume compared to Friday. But we might see some profit taking on ACB with the inability to break 252, and support will be down at the low of Friday for ACB. That's down at 247, I believe, just double checking. 246. So now we have a double top, high of Friday and high of today. MJN is up at the high of the day. If we get a break of 180 on MJN, that will be a little bit more confidence that that low of the consolidation 175 is going to hold. 177 was the low of Friday, and we're still holding that level as well. So a pretty weak, uneventful morning. in the sector so far as we consolidate. RTI looks like 62 cents is a double top at the all-time high. 58 cents was the high of Friday. So far today, we're hitting 60 cents. So we are close to that all-time high. If we break 62, it's blue sky breakout. So that would be a level where I would be looking for a bullish entry if 62 cents were to break, because it's clear resistance. And I believe a lot of traders would be watching that double top, and we should see a nice quick push to the upside, allowing for a couple percent at the least as soon as 62 cents were to break. But I would want to be confident that it's going to occur on some decent volume. So I would be comparing today's volume in the first hour to Friday and looking for more than 1.1 million shares traded total on the day. So I would be comparing. Let's do that now. So the first hour trading of volume on RTI for Friday was 139,000 shares, and today we're already well over that level in the first 10 minutes of trading. So we're going to see a spike in volume on the daily chart without a doubt. And that's just comparing previous first hour of trading volume. Very significant out of the gate. MJN's up at the high of the day, 180, still maintaining higher lows on the daily chart. ACB is heading down to test 260, or 246, I should say. APH looks good. APH is at the top of my scouting list for entry, and it's because we broke that high of December 14th. We pulled back in the reaction to earnings, but that's normal, healthy consolidation, and now we're looking for continuation, and we're getting it. 572, 573, 575 are the resistances that stand out, so there is a resistance band up at those levels, but we've already broken the high of Friday easily at 554. I want to keep an eye on RTI, that potential of the all-time high, but again, volume stands out on RTI first thing. And again, it's comparative volume. I'm concerned about RTI volume compared to RTI because obviously the dollar volume isn't going to compete with any of these big names. So strongest this morning, APH, RTI, and MJN. And OGI is the weakest as it has been on the daily chart. But again, there's very little day trading opportunity in this sector until we see big time volume pick up again. And there's no telling when that's going to be. So I would not try and day trade in this sector at this point. It's almost forcing it. And you're certainly going to find a much tougher trading environment if you're trying to do so with a lack of volume and a lack of liquidity. And I learned that lesson the hard way with the USMJ sector. We had all of those crazy explosions in 2014. And then once spring 2014 rolled around, all of the opportunity dried up. RTI could be a day trade if we see a break of 6.2. But even then, you would have to have a pretty decent sized position for it to be worth your while. 10,000 shares could net you a couple $100. So that might be worth it. But again, we have that very clear 6.2 resistance at the all-time high. So establishing the ranges for the morning here. Currently fitting in with the ranges of Friday for most names besides APH. And MJN, after 180 resistance, we would be looking up at 182, the high of Friday. So pretty low volume morning for most names, not RTI comparatively, but everybody else, not much standing out. We can see some momentum going here if we can break the highs of Friday, but a lot of names still struggling to do so. And long-term investors are really enjoying the way the sector is trading. Obviously, when it's going crazy and seeing 10% moves daily, a lot harder to just sit back and let your long position ride because you want to be taking advantage of those dips and spikes. But not so the case with how we've been trading recently. Now we have a higher bid on RTI, trying to take out 60 cents. So you can see there's more shares now on the ask for RTI, up over 100,000. Tough resistance at that point. And APH, EMC, very low volume on EMC so far this morning. Can't check out SL. I don't have access to it on any software that I use on multiple websites. I usually check SPRWF, but it's closed today. EUF. A lot of these smaller names do not have listings in these American brokerages and these American charts. And every time I check a ticker, I'm checking stock charts, TradingView, and Fidelity. So Puff can't find on any of the three. And neither IN as well. Looks like certain Canadian exchanges are not American friendly in terms of software and charts. I can see Puff Ventures on the OTC name, PUFXF, but again, it's not trading today and I can't get the Canadian version. The bid and the ask is pretty much, imagine it like supply and demand. So you have a guy standing there saying, I want this many shares at this price. That's the bid. I'm willing to pay this much. I'm not going to pay any more. And then you have someone on the ask saying, I'm willing to sell these shares, not for a penny less, at this price, this many. And that's how you establish a market with the bid and the ask. How many people are willing to buy at these prices on the bids? How many people are willing to sell shares on the ask? So if you see not a lot of people willing to sell on the ask, as the bulls buy the shares that are on the ask, the price moves very quickly to the upside. So it's all about supply and demand. If you have a lot of supply of shares and not a lot of demand, the price is going to go down. More shares on the ask, less shares on the bid, the price is going to go down. SPRWF is not going to trade today, but SL is going to trade. IMLFF. I think I have a very long-term loser position in IMLFF from long ago, from 2014. Definitely have some lotto plays from USMJ tickers. I know this is a Canadian name, but from long ago, which are pretty much tax write-offs at this point. But IMLFF looks to be turning the trend around. And obviously, again, IMLFF is not trading today, as it is the OTC version. I need to know the exchanges that these names are on. If I type in just TBP, being in America, it's not going to recognize the ticker. I have to either put TO if it's on the TSX or V if it's on the Venture. RTI, there's a nice bull break of 60 cents. Keep an eye on RTI. Lots of shares on 6-1, but again, this volume is here today. Let's just compare it now. Checking back at Friday's total volume of 1.1 million, and we are already over a third of the way there in the first 20 minutes of the day. It's all about that all-time high. We've got CGC testing the high of the day. APH is at the high of the day. NXE.TO trying to break the high of the day, 343. And checking daily chart. Full on breakout mode. It's very overbought on the daily chart. And again, this is one that I would not be entering a trade at this point. You're already in. Congratulations. It's been going great with increasing bull volume, but we've seen a move from 230 up to 340. 60% move in 2 weeks. So I would not be chasing up here. Close below the upper Bollinger Band of 336 would be bearish short term, indicating the consolidation is coming. But as of right now, the daily chart certainly still favors the bulls. And the next resistance, to zoom out to the weekly time frame, and we're hitting higher highs. So the bulls are in absolute full control, breaking out on the daily and the weekly. And looks like we are in blue sky breakout here as well. So CGC breaking the high of the day. That's a great sign. Now we need to break the high of Friday, 979. Look at APH go. Bulls in full control of APH. It is very strong. Really nice follow through for the bulls after 2 days of consolidation in reaction to those earnings. And 572 is the next resistance. There's not a ton of clear resistance in this range. Now ACB is testing the high of the day, which is also the high of Friday. Good info on the level 2 for APH. So that's what you can see by looking at level 2. Big positions will move their shares around. And I used to trade in a chat room way back for the USMJ sector, and we had a whale in there who had a lot more money than we all did. And we watched him do this. We watched him put $100,000 on the ask and then move it and watch the price react to it. And he could absolutely manipulate what was going on. Just one single person. All depends on the total volume to see if the amount of shares would have an impact, but his certainly did on some of the low volume plays. There's a lot of talk in our chat room of BE, Believe. A lot of people are anticipating a license there. I would put that in the category of a Canadian lotto play, just because it's a lot higher risk than these established names that do have licenses already. If you're seeing a stock jump 26 cents on 1K shares, absolutely stay away. Lack of liquidity. NDM needs to break 312. And it did. Next resistance on the weekly chart, none in sight. Another name in full-on breakout mode with very little resistance, psychological levels. Although, let's see, if we can zoom back 5 years, we can maybe find some resistance levels, and we can. So next resistance I'd be looking up at, 366 stands out on the weekly time frame back in 2013. So ACB is still struggling with 252. We have multiple rejections from that level. Keeping an eye on RTI as the 60-cent bid builds. See if we start chipping away at 61-cent resistance. Decent amount of shares there. So ACB currently fitting in within the tight range of Friday, getting tighter and tighter. Only a 5-cent range so far this morning. Bulls need to break 252. Bears want to break 246. APH so far a lead bull this morning right behind RTI. And again, RTI is a higher risk, higher reward play. So comparing APH volume, now we're looking back at Friday's total volume. It was 880,000, so I can see we're over 25% of the way there in the first half hour of trading. Pretty solid. If I want more details, I compare the first hour. We are halfway through the first hour. Total volume Friday, 213,000. We are already passing it 50% of the way through the first hour of trading. So I can assume that APH is likely going to see more volume than we saw on Friday, which favors the bulls because we've already broken the high of Friday, and we're seeing some nice momentum to the upside. RTI, that ask is chipping away down to 160 now from over 200. I do day trade, but not in the Canadian sector these days. Swinging the Canadian sector, not enough volatility and trading range. Make day trading worthwhile. Need to have those opportunities, need to have that volatility in your favor. Because otherwise, trying to force things in tight trading ranges, it takes an already difficult task and stacks the odds against you. That's why it's important, well, not important, but I suggest being comfortable in multiple markets, not only just Canadian MJ, but learning how to utilize technical analysis for other things. If you like gold miners or anything else, even if you're just paper trading and practicing, but being able to jump from markets to markets changes everything. When I was only trading penny stocks in the US And when the MJ market would dry up and the penny stock market would dry up in the spring and the summer, it was a pretty common pattern. It was a very, very difficult trading environment. And it certainly would have been more beneficial to either stop trading during that time or move on to a market that has liquidity or a different sector. So being able to diversify and branch out certainly is beneficial. So both CGC and ACB currently fitting within Friday's tight trading range. Bid is building on RTI. That's definitely one to watch today. APH and RTI leads for the bulls. And APH resistance after 555 looking up at the 570s. 572, 573, 575. I'm familiar with MSIG. It is in a very nice bull run. Huge day on Friday. Close at the high. Certainly expecting continuation tomorrow when the market opens back up. It is one of the lead U.S. bulls. And the next weekly resistance, the next major resistance is up at 56 cents. So there's still lots of room to the upside. High from 2014, that crazy run was up at 92 cents. So we're still well away from that level. And that's what drew me to the Canadian sector. I loved that all these stocks were in blue sky breakout because all of these US names have tons of resistance because they have pulled back significantly from 2014. Anybody that entered MSIG in 2014 was pretty much down 95% plus by the start of 2015. They've gotten some of that back. But a longer price history on some of these names is not always beneficial because it has more resistance. APH still holding up strong, chipping away that ask on RTI bit by bit. CIA.to. Highest price we've seen on this breakout, 81 cents. Look at the bulls in full control. Certainly overbought in the short term, but bulls in full-on breakout mode here. On the weekly chart, the next resistance is up at $1 psychological and then 110. So again, if not already in this name, I would not be buying up here. We have seen a move from 47 cents. We're almost at 100% move in 4 days. So I'll never chase if I've missed a move that significant. But if you are already in, there is no reason to sell at this point as the bulls are very, very strong. Looking like news not really creating much of a buying environment, buying storm here this morning. RTI 62 cents is the all-time high. Actually, I take that back. It's only the highest price we've seen recently. It is not the all-time high. There is some price action from summer of 2014 all the way up towards the $1 range. So a break of 62 would certainly be a bullish break. And after 62 cents, next resistance I would be looking at would be, there's some resistance at 64 and 68. But certainly bulls in full control if we can break that double top at 62 cents. SL, let's look at what that volume, well, can't get the darn Canadian ticker. I'd be very curious to see how significant that bull volume in the final hour of trading was. To see if it was just a small amount of people that could have run it up that significantly. So it's looking like while these big major names are flattening out and not seeing much trading range, the smaller names are seeing the action, like RTI, MJN, EMH, BE, TNY. And a lot less dollar volume is needed to move those names compared to these big names that are trading millions of dollars. You see RTI today has traded less than $300,000. And you look at CGC and it's already traded over $1 million. BMC is consolidating, watching $4.05 and $4 supports. But certainly not much bullish action this morning, not much bearish action. We'll stay on a bit longer here, but not much longer because there is not much going on. Whenever I see a lack of volume or liquidity, if I were looking to day trade, I know to pack it in and not try and fight against what's not there. So again, for ACB, my longer term swing position, my exit would be if 237 breaks now. The low of Thursday is pretty important for the shorter term. And by shorter term, I'm looking a couple weeks. Low of Thursday is important. And that would be my exit signal on ACB. MGW, very low volume. Had a gap up open. The gap would fill down at 67 cents. So we hit 68 cents, so I consider that gap filling because you can't trade between 67 and 68. And again, that must hold support is 65. Triple bottom the last 3 days. And if we can see a close today, 69 or higher, MGW is looking good. And next resistance, After 69 is 71. For ACB, it's 237, the low of Thursday. And that also is factoring in what my entry is, because that would allow me to exit with a bit of profit still. So RTI, the volume is there. An ascending triangle pattern on RTI. I'm going to draw this pattern real quick and then I'll share it. So an ascending triangle pattern is when you have a horizontal resistance line. We have a very clear 62-cent double top, and you form higher lows as you approach that level and the range tightens. So there's still a lot of space in this pattern, but this ascending triangle pattern was really, really helpful back when the breakout started, or I shouldn't say started, but right before the bulls really showed up in the Canadian sector. There was an ascending triangle pattern. APH and ACB were showing it very clearly. And if you saw the videos I started posting then, that's about when I started posting these videos. And it was a very clear pattern. And what happened is CGC made a bull break before everybody else. And that was the ascending triangle pattern. Horizontal resistance line, higher low pattern, getting tighter and tighter. Look what happened when that resistance line of the ascending triangle broke. That's when the bull volume poured in and the breakout exploded to the upside. And these were a bit of a laggards because CGC had already made that move and it was the sector leader. So we knew more likely than not, these laggards were going to follow along. And it was right here. And CGC made the bull break on November 8th. And APH made the bull break on November 10th. ACB had a similar pattern. Actually, ACB was one that didn't have a similar pattern because its trading history wasn't as long because it was changing exchanges. Still chipping away at RTI. I go live every day for over 2.5 hours in the morning and then in the afternoon, but I do that on our website. Only doing this live now, like I did on Thanksgiving when we have the US market closed and the Canadian market open. But our main focus every day, we're looking at stocks like Amazon and Apple and Facebook, looking at gold and the miners. The MJ sector is just a small subset of what we look at. So a lack of action. EMC continuing to consolidate. So we'll be watching EMC this week to see if 405 support can hold. And after 405, we actually have, 405 is the next clear level. Then I'm looking down at 398, the previous all-time high, resistance, now support. And then I would be looking down to 350. Looking like some short-term consolidation happening on EMC. Certainly a concern for RTI, now up to over 300,000 shares on the ask. There's a lot of sellers at this level. We would have to see over 50% of today's total volume to break that ask. MJN's looking for a new high of the day. Looking up at the high of Friday as the next resistance, which is up at 182. Very low volume there. So it looks like RTI, unless the bulls show up in a big way with a lot of volume, they're going to have a difficult time breaking 62 cents today. 300,000 shares is a lot compared to the total volume we're seeing so far. EMC, I'd be scouting with $4 psychological support and 405 support. So ideally, on EMC, I'd like to make an entry around 405, and I would exit if 398 were to break, which was the previous all-time high resistance and now support. Because if we lose 398 support, it's a lot more likely that we head down to 350, and I obviously wouldn't want to hold a losing position that would give up that many points. So if it heads down to the low $4 range, I make an entry. Let's say I enter at 405, put my stop loss at 397. Then I would risk $80 on every 1,000 shares. That MGW is on the 5-minute, and you can see the lack of volume. We don't even have any range on these candlesticks. So certainly does not help charting when you don't have enough volume to have candlestick shapes. And I won't even use the 5-minute chart in terms of moving average support and resistance when volume and liquidity and trading range is this low. I'll look at it for highs and lows and overall patterns, but in terms of moving averages, you need consistent volume and liquidity for those to be meaningful, in my opinion, on the shorter term time frames. MT, the high of Friday, was up at 675. So we are testing that level again. It's a double top. ACB has the same double top. CGC by 1 penny has a double top with the high of Friday. So if MT bulls could break 675, 684 is the next daily resistance. CGC, this volume is just tiny. Looking like it's going to be the lowest first hour volume on CGC in the past 10 days. At least 10 days. A very insignificant volume. And now that I'm looking at it, look at this hourly chart on CGC. 200-hour resistance. Did get over it for one candlestick here, but then we rejected 1, 2, 3, 4, now 5 times. That level is 976. So some hourly 200 period resistance knocking the price down over the past 5 days. You can see the first hour of volume has been getting lower and lower past 7 days as the range gets tighter and tighter. Tightening ranges very often accompanied by a drop-off in volume, and then that tightening range breaks with a volume spike. There's different stochastics you can use. There's the full, the fast, and the slow. So they're all going to give different readings. Very, very rarely will I see the stochastics tell me something that the RSI isn't already telling me. I like the RSI better as an indicator personally. But when I do use stochastic, I use the full. So I'm going to wrap it up here this morning. Little going on. APH lead bull. Everybody else is battling their high of Friday resistance. APH the only one to clearly get over it in terms of the big names. And again, I definitely separate the big five: CGC, APH, ACB, MT, and OGI. And I guess EMC fits in that category now, so we'll call them the big six. And CMED could be in there as well. But it's very clear that we have big names, $100 million market cap plus, and then the smaller names is definitely a smaller sector. ATTBF, that was a fun one. We were trading that one back in 2014, and if you heard what I said earlier about the whale that we were trading with, that individual made hundreds of thousands of dollars on ATTBF, and he had over $1 million position at one point. Certainly didn't sell at the top, gave back lots of profit, but it was a really fun one. If you go back and look at the chart from 2014 from ATTBF, we pretty much went from 10 cents to $2, and that occurred in about 2 months, 3 months. And in reality, we actually went from about 5-10 cents up to 237, 278. So huge gains. I can remember one morning I sold my ATTBF, and 2 days later it was worth $40,000 more dollars. So ATTBF in the short term, very, very tight. Resistance is 11.8, 12.1, 12. Looks like a lot of resistance around this 12-cent level. 12 and 12.1. We have tons of tops in the past 6 weeks, so I would not be looking to make a bullish entry until those levels were to break. And clear support being established as well down at 10 cents. Break of 10 cents would be bearish short term. The range is 10 cents to 12 cents, and we've been within that range for 6 weeks. MJN now waking up. So here we are at that high of Friday. And if we break that high of Friday, 182, next resistance is 185, high of Thursday. Now the ask on RTI is building, so very unlikely that we break 62 today unless we get a big surge in bull volume. Clear exit for APH at this point. If you were in any bullish position short term, a break of 521 would be the exit point. That's a decent amount of risk from an entry here in the 550s, but the bulls are in control. And APH, in my opinion, out of the big six, big seven, is the strongest on the daily chart currently. EMC is a bit of a different scenario because it's a lot more recent, a lot less trading history. But in terms of the big five that had the November breakout, APH is the strongest. And that's because, again, we broke the high of December 14th, breaking the lower high pattern. Waiting for ACB to do that at 264. We topped out at 262 on this bull move the past couple weeks. So December 14th high is a clear resistance to keep an eye on. So thanks everybody for tuning in. And feel free to come check out a free week trial. No credit card, no nothing. We have 7 hours of educational videos. Check them all out. And then you can bail after a week. And I will see you all sometime soon.